Over the last few months, I've been talking a lot about my unit trusts in property, how people can get into property without a deposit and without a bank loan. The unit trust makes investing in property so easy. Basically, we find the right development to do a successful development. We set up a property trust and then we manage the development to make a profit. We offer shares to investors who want to come on board and invest in the development. The unit trust is really easy to invest in because it doesn't ask you for a deposit. It doesn't ask you to go for a loan application, and everything is managed by us. You simply decide how much you want to invest and how many shares you want in the development. In our last development, we raised over $750,000 on one investment, and our anticipated profit in that deal is going to be around $1 million. Here I am, and I'm in an interview with my accountant talking about the structure of how this has been set up and how we put this together and what are the tax implications of investing in a project like this. He also talks about superannuation funds and if they can be a part of this development. Watch closely. Today, I'm with Sam Ravenovich. Now, Sam, I've been working with him for quite a number of years. He is my accountant on a few deals that I've got, and so forth. We have been working together on quite some time. So Sam's background is accountancy. He owns a company called WC Williams & Co., which was founded in 1952. He took over the business in 1998, and he is the CEO of that company. Sam's done a numerous amounts of work for me, both personally and also in the unit trusts. So he's a registered certified practicing accountant and a registered tax agent. So welcome again today, Sam. I just want to ask you a few questions that the viewers might have about how this is set up.
Yeah, good morning, Mark. Yep, no problem.
With these trusts that we've been setting up and doing developments with, how does it actually work?
Well, we set up a unit trust, which has got a certain number of units. In the cases in the past, has been 100 units, and the investors come in and buy up the units. Might buy 10 units, 20 units, 30 units. We got a project that's worth, say, $1 million that we need to raise. 100 units, that would mean that every unit would be worth 10,000. Someone comes in and says, "I'll take 5." They need to put down the 50,000, and they become a unit holder in the trust. And the trust goes ahead and basically carries on the project.
Am I really an owner?
You're the owner of the unit in the unit trust. You're not the owner of the actual property. The property is held by the owner of the property is actually the trustee company for the trust. Okay, so but you certainly are the owner of the units, and you are actually given a unit certificate to indicate that.
So it's really like buying shares in a company that's listed on the ASX.
Very similar with much less compliance issues, a little bit more flexible, easier to distribute funds. And the big selling point is that you don't appear on any public registers, whereas if you're a shareholder, for example, anyone can go to ASIC, look up the company and see who the shareholders are for the company. In this particular case, it's a private arrangement.
And are there any other tax implications that I should know about if I want to invest in this?
No, look, the only tax implication is that if the project basically makes a profit, the profits get distributed to the unit holders according to the unit holdings. Okay, 10%, 20%, 5%, and then they take care of their own tax. So the trust does not pay any taxes, but the unit holders will when they lodge their returns.
And if the property loses money, the development loses money,
Yep.
am I liable?
Well, no, you're not liable. Essentially, if all the monies are not recovered, then you put in 50,000. Let's say, for example, you only get 40,000 back because your share of the loss may be in $10,000 because you held that many shares or units. So there would be no other monies that you would need to fork out, or
Okay.
you wouldn't be liable for anything else.
And if the trust takes a loan to say do the construction, is that going to affect my credit rating?
No, it's a completely separate legal entity, but the loan is basically being taken out by the trustee company, so it would not impact your
And if I want to sell my shares like halfway through, what's the process?
That's run through, and all of these rules are run through the trust deed, which is basically the rules and regulations of the trust. And that allows for the shares to be basically offered to the other unit holders.
Yep.
And finding them taking them up, okay, you're quite welcome to find a replacement investor in the project.
And who makes the decision for the trust?
That would be the trustee company through its director. In the past, the way we've set it up, we set up a trustee company. You have been the director and the shareholder, which sort of makes sense because you're the one who is undertaking the whole project and has knowledge and skill to do this, to find the land and to build and make a profit. So essentially, it falls on your
Okay.
lap, Mike.
Yeah.
So-
Yeah. Nat. And can a major shareholder force the trust to act, to behave in a way that's different to the other shareholders? Or
No,
influence in any way?
yeah, no. All the decisions are made by the trustee company through its director.
Yep.
In this case, you. That's been the case in the past.
Yep.
If the unit holders are unhappy with your performance, if they can get together enough unit holders that hold at least 75% of the units, they can remove the trustee, which would be you,
Yep.
and replace it with someone
Okay.
else.
And can someone run off with the money?
I mean, the money's tied up in the land, in the construction costs,
Yep.
and at the end of the day, the trustee through the director of the trustee company needs to act for the benefit of the beneficiaries,
And
okay, in their best interests.
okay, so Sam, because we're doing developments, do we pay capital gains tax?
No, the ATO would see that as being on revenue account. The trust would make it the profit, and then the profit is distributed to the unit holders according to the units, and then they take care of their own tax.
Okay. And there's only one other question that we want to ask that's on the mind of a lot of people here. So we know that self-managed super funds can't develop property, but if I had a self-managed super fund, can I invest in this?
The short answer is yes.
Okay.
It's just a unit holder, just like any other investor.
Well, that's great. I hope that that's sorted out some questions that all you guys have had. You'll see some further videos come along the way. And when the next project comes up, you'll be the first to know about it. Thanks for joining us today.
Thank you.